JFD, just fair and direct.
Okay, hello and good morning everyone. Welcome to JFD Traders Espresso with me, Darius Anucauskas. Today is the 21st of May 2020, so yep, welcome everyone. Welcome to this Thursday's morning session where we're going to have a quick look at the markets, a view of the charts, the usual stuff. But before we do that, as always, let's quickly have a read through our risk disclaimer. So, the content we produce does not constitute investment advice or investment recommendation, should not be considered as such, and does not in any way constitute an invitation to acquire any financial instrument or product. As always, a few seconds for you to read the rest and we can continue. Okay, so now then, also before we jump into the charts, let me just quickly open this up. Before we jump into the charts, quick mentioning of our JFD YouTube channel, to which you can always subscribe to in order not to miss any of our upcoming videos, and of course our JFD Bank website, and specifically our JFD research page, which we also update on a daily basis. So yep, feel free to visit us here on jfdbank.com and click on the research tab right there on the top. So I believe you can find a lot of useful stuff here. We are also preparing our daily analysis as always, so yep, feel free to kind of check us out a little bit later to have a read through our daily analysis. Now then, quick update here. Now the one that I keep using here seems to be a little bit lagging, and this information seems to be a little bit lagging because here the figure, as you can see, it's still kind of below the 5 million, but however, all reports are already saying that we are already above that figure. So, and for example, certain other websites, you can see that yes, the figure is already well above the 5 million mark, and yep. For now, basically what we could probably do is maybe instead of that one, use this one, and we can see that the well, the leaderboard, if we can call it this way, is still headed by the US, then it's Russia, Brazil, and then Spain. So if UK managed to drop into fifth place in terms of total infections, of course, because still total deaths, the total deaths is still led by US and UK, followed by Italy, France, and Spain. So yep, we'll continue monitoring this, and yep, hopefully it all can kind of slow down a little bit. So now then, jumping into a few charts very quickly here. So looking at the German DAX, we can see that the index yesterday closed very close to this barrier that I kept talking about, the 11,235-36 zone, but it failed to kind of stay above it. So this morning we are seeing that the cash index is currently balancing at around 11,150 zone, so basically roughly around here somewhere, still not far from this barrier, the 11,236, but yep, below it still. So basically, in a way, we can see that the index is kind of struggling to get out of this range for now. Of course, we'll see. Let's see if it actually can eventually do that. The good sign is that we were still, even on the cash index, we're still balancing above the 10,986 zone, which is the high of the 11th of May. Talked about this level. As you can see, even yesterday it acted as a fantastic area of support from which it kind of rebounded and pushed higher. So that's why we'll keep an eye on this little area, the 10,986. If we get a drop below this, then we could aim for slightly maybe lower levels within the range, because let's not forget that for now, to get more comfortable with us, with lower levels, we would need to see a drop below the the 10,280 zone. So yep, and that's the lowest point of 2018, and you can see it also acted as a very good area of support recently. So that's in terms of the German DAX. Now looking at the FTSE 100, we had a good push yesterday. It closed in the positive territory, however still below, remained below this 6,152 territory that I keep talking about. And looking at the cash index and where it is right now, it's currently balancing at around 6,032 mark, roughly around here, basically slightly below the yesterday's close. However, it still remains above this area of support. Let me just quickly grab this one. Below the low of yesterday, which is around the 5,962 zone, roughly around here. So in a way, kind of, it still has a chance to push higher. However, as I mentioned previously, for us to get comfortable with higher levels, we would need to see a push above the April's high, which is above this, which would be above this 6,152 territory. So the April's high is around 6,152. We need to see a push above this in order to aim for higher levels. So for now, yep, guys, if this by any chance suddenly drops below the low of yesterday, then maybe we could consider some lower levels here. But again, for now, we are leaning a little bit more to the upside. Now, jumping into a few commodities here. Now, silver managed to work out perfectly according to the whole idea. Where yesterday I was mentioning that if this barrier, the 17.60 level, continues to provide resistance, we could see maybe a bit of a setback here, a bit of a drop lower. And as you can see, for now, everything's kind of working according to the plan. We are seeing a correction to the downside. In a way, there is a chance for this one to drift further south, maybe even test the 16.39 zone, roughly around here, which is the low of the 28th of February. And in the same area here, the commodity could also test the 200 EMA here on the daily chart, so which may also provide support. However, if this area fails to provide support, the kind of last chance for the bulls to step in could be near this upside support line taken from the low, the 18th of March. So yep, for now, guys, keep your eyes on this one. Let's see how all this is going to play out. But yeah, for now, it is drifting a little bit lower. Let's see if it can push further south. In case this reverses earlier, in case this actually does not travel all the way here towards this 16.39 zone, roughly around here, and pushes above this 17.60 level straight away, then yes, of course, this would confirm a forthcoming higher high, and our next target could be around the 18.94 mark, which is the highest point of February this year, and in other words, also the highest point of this year as well. So keep your eyes on that one. Brent Oil continues to move higher, and yesterday we had a nice push of the 36.10 zone, but still closed below it. However, it is doing this today. It's pushing above this 36.10 level I talked about yesterday, and yep, now the big question here is, can it overcome this downside line taken from the high of the 8th of January? So the the buyers kind of got confident yesterday a little bit with the news that came out from the US with the crude oil inventories, which managed to beat the forecast by a lot, I would say. And yep, so we have a lower amount of inventories, oil inventories. So yep, this kind of gave a boost to the price here. And for now, like I said, from the technical side, let's keep an eye on this downside line, and let's see if it actually gets broken. And if it does, then, well, I mean, of course, we could start aiming for higher levels. Ideally, in order to aim, or should I say, to get a bit more comfortable with higher levels, we would prefer to see a push above the 39.60 zone here, which is which is the high of the 11th of March, and also coincides with the 100 EMA on the on the daily chart. So yep, keep your eyes on that one, guys. In terms of the downside here, now, if this by any chance reverses sharply to the downside and drops below the high of the 6th of May here, which is roughly around the 32.21 zone, this is where, of course, we could start considering lower levels. We could start maybe looking at some downside here. However, still to get comfortable, a little bit more comfortable with lower levels, then yep, we would like to see a drop below the 13th of May, below the low of the 13th of May, which is around the 28.66 level. So again, for now, we're leaning a little bit more to the upside. However, again, we will be very careful near this downside line, because if it provides resistance, then we could see another round of selling. But if it fails to provide resistance, a nice good break of it could open the door towards higher levels. Now, jumping into Ripple. I've talked about this one recently, and basically I was telling you guys that Ripple continues to respect this barrier here, the 0.2053 territory, which also coincides with the 100 EMA. Maybe that's also helping the kind of the bears to kind of keep this one lower. For now, basically, the previous idea that I mentioned that was that if we see the hold up here near this 0.2053 territory, then, well, I mean, there is a chance still for the bears to step in and drive this one lower, maybe even all the way here towards this key area of support near the 0.1760. However, as you can see, for now, yes, there is a chance to kind of have something like this, and we'll see if this barrier continues to provide good resistance. Then yep, we could in a way aim for this level here, the 0.1760, which acted as a very good area of support. And then we'll take it from there, of course. If by any chance we finally get a daily close above the 0.2053 territory, then of course this kind of increases the chances of a potential move higher. However, as you can see by my arrow here, the upside arrow, the more comfortable level for us is from the 0.2357 zone, which is the highest point of April. And a nice good pop above this could, yep, open the door towards higher levels. Jumping into a few pairs very quickly. So here AUDUSD yesterday managed to break and stay above the 0.6570 zone. I talked about this one, but as you can see, it got a hold up near this 200-day EMA. And this morning, to be honest, we're seeing a decline, a move back below the 0.6570. Don't get me wrong, this is just the beginning of the day, so let's see if the bulls manage to drive this one back below it. But to be honest, let's be very careful here, because if it still manages to close a daily candle above the 0.6570 zone, then there is a slight chance for this one to push further north, maybe even overcome the, well, not maybe, but overcome the 200-day EMA and push towards this 0.6677 level that I kept talking about. That's the low here of August 2019, the low of September, and also it acted as a good area of resistance back in March here by kind of acting, holding the rate from moving higher in March. So yep, this is going to be our that first level, but if that gets broken, then yep, further acceleration to the upside could be possible. However, for now, all eyes are on the 0.6570 zone. Let's keep an eye on this one, because again, you can see that we are drifting back down. So, but if the bears manage to take the upper hand here and stay and keep this daily candle today below this level, then well, maybe not everything is good here in the bull block. USD CAD. Now, with this one, I talked about this one yesterday, and I was telling you guys to keep a close eye on this level here, the 1.3856. What I was mentioning that that we are potentially in a descending triangle here, well, actually, we could even say that we are in a descending triangle. Yep, we needed to see a nice good drop below the 1.3856 level in order to aim for lower levels, because what I was saying yesterday, that although we are very close to this level, to this hurdle, still a break of it and a daily close below it would be needed in order to aim for lower areas. But as you can see, the break never happened, and now this morning we're seeing a push back to the upside. However, again, don't get me wrong, we are in the beginning of the day. Still, there are some data to watch out for today, so So, for example, the the Canadian ADP non-farm employment change figures. So, yep, that's something to keep in mind for today. Of course, the U.S. services PMI and manufacturing PMI figures, the preliminary ones. So keep your eyes on those as well, and let's see how all this is going to play out. But if we, from the technical side, if we do get a nice, good, strong move below this 1.3856, then yep, lower levels could be met. In terms of the upside, we'll take a bit of a conservative approach and wait for a push above this downside line in order to consider some higher areas. US dollar against the Russian ruble here. Now, I finally, this is kind of working out perfectly for now. So I've talked a lot about this pair, and basically the pair is now kind of drifting lower. However, as you can see, it got a hold up near the 100 EMA here on the daily chart. So for now, everything's kind of, like I said, working out according to plan. Everything is according to all the textbooks. So at descending triangle, we got a break lower. So yep, everything's kind of nice and dandy, I would say. But for now, guys, like I said, let's see if this can push further below the 100-day EMA. If it can, then the next target for us is the this 200 EMA on the daily chart. But so yep, keep your eyes on this one. In terms of the upside on this pair, we would wait for a break of this downside line first, and then consider higher levels. GBPNZD. So this one drifted lower, so fantastic movement here. Right? Everything's according to the plan. So yep, yesterday we moved below this 200-day EMA, and yep, comfortably tested this lowest point of March near the 1.9898 zone. Today you can see that the rate continues to get held by this area of support, and the big question here is, can it actually recover a little bit before actually drifting back down again? So for now, kind of the idea could be this, that we may see a bit of a correction to the upside, not much, maybe let's say even towards this 200-day EMA, and if it provides decent resistance, then yep, we could see something like this basically happening, where another slide could happen, and yep, the bears could take the lead again. However, for those who are a little bit more on the cautious side, instead of maybe expecting something like this, you could take the more cautious approach and wait for a drop below the yesterday's low and below this 1.9898 zone, and then yep, aim for lower levels, because this would confirm a forthcoming lower low, and maybe yep, well, not maybe, but probably more buyers could be joining in here. In terms of the upside, here the probably looking at this daily chart, we could maybe consider higher levels if we get a push back above the 2.0476 level, which is the high of last week here. So so yep, until kind of then, to be honest, we're probably gonna, even if it travels back above this 200 EMA but stays below this 2.0476 territory, we'll probably maybe be a little bit on the neutral side. However, we'll take it from there. We'll see the kind of the activity, the price action then, and we'll reevaluate everything then as well. So that's why for now the only upside that we could see here could be a bit of a correction before another leg of selling. EURCHF. Now this one is quite interesting, and I talked about this one yesterday, and basically selling is that the pair, as you can see, it kind of got held nicely here by this 1.0611 territory, which, as you can see, although we did get 3 overshoots here on Monday, Tuesday, and Wednesday, still it failed to close a daily candle above it, and that level is the high of the 28th of April. You can see that the pair drifted lower. However, what we could be seeing here is maybe a possible flag pattern, with a nice pole being this Monday's candle, and if so, then yes, keep your eyes on this one. We may see another round of buying. For those who are more on the cautious side, you could just wait, of course, for a nice push above the 1.0611 territory, and then aim for the upside. But again, like I said, for now, like I said, this is just an idea of a possible flag, because if it kind of continues to balance somewhere around here, then yes, like I said, we will keep this idea in mind that there could be a possible flag here, and we could see a push higher, a possible bullish flag, I mean, and we could see a push higher. But if it suddenly starts dropping back below the 1.0545 territory here, then, well, I mean, this would also place the rate below the 21-day EMA, and, well, could make the bulls a little bit worry. Then, yep, it could increase the chances of a potential slide back to this key area of support near the 1.05 level. So for now, guys, keep your eyes on this one. Euro USD finally. So yesterday we did get a break above this 1.0990 level, but yep, it failed to stay above it, and this morning we're seeing a bit of a decline here. However, the positive aspect is that it's still balancing here. Looking at this daily chart, it's still balancing above this 100 EMA on the daily chart, so it still could be a good sign. However, to get comfortable with higher levels, we need that strong move above this 1.0990, and of course, as I mentioned before, we need to see a daily close above this territory as well in order to kind of start considering slightly higher levels like the 1.1039 zone, or to be honest, our probably preferred level would be here, the high of the 27th of March near the 1.1147. So yep, keep your eyes on that one. In terms of the downside, as I mentioned before, if this suddenly starts dropping back below the 1.0875 zone, this could start, well, could make the bears kind of, or sorry, the bulls worry. However, our preferred scenario from which we after a break, preferred level after a break of which we could consider lower levels, we would be still near the 1.0777 zone, the lower side of this range. So yep, that's why, guys, for now, keep your eyes on this one. So I really hope you found it useful, guys, and thank you very much for watching and listening. If you want to join me later on, my traders tea time is always 13:15 GMT. Yep, and we'll have a look at some of these instruments, some new ones, and we'll take it from there. But I hope you guys have a fantastic trading day. Stay safe, both financially and health-wise. So yep, yep, I'll catch you later. Thank you very much, and bye-bye.